In this week's episode of Investors Corner, me and Ian are joined by Peter Licourinos again of HMO Premier, and Peter has brought along Richard, a seasoned investor that he works closely with. Now, we'll be speaking to both of them about what got them into HMO property investing and how they're creating a new type of HMO. We'll also ask them how they approach a property investment and how they make it work for HMO purposes. We'll also ask them about their thoughts on what they could teach people that are thinking about getting into HMO investing and the importance of working with someone like Peter, who has all of the tools and the team to make it work for you. So this is definitely one that you should listen into. Make sure you do, and make sure that you subscribe to the Investors Corner podcast.
Richard, welcome to the Investors Corner. How are you?
Yeah, very good, thank you. Thank you for having me.
Yeah, Pete, thank you for arranging. Back on.
Always nice to be back.
He's a regular.
He's a regular, yeah. How are you? How's things in the HMO world?
Yeah, very good. It's been a very, very positive start to 2024 as we anticipated and predicted. So yeah, really good so far.
Yeah, well, we've got you on camera multiple times saying that, so it's good that it's still going on and you've been right 6 months later. So listen to the rest of the show for more Pete Licourinos forecasting. How did you guys originally meet? Obviously working with HMO Premier, but how did you originally meet, Richard?
So how did we originally meet? It was through a friend of a friend.
Yes.
I'm from Wokingham, Pete's obviously Bracknell, but very Wokingham centric. So I'd heard his name a few times before. I'd seen him in several pubs in the area.
Yeah.
But to be fair, a few people did say, "Oh, you're in property. You need to speak to Pete Licourinos." And we sort of passed by in a few locations. I had a quick chat a few times, but eventually we met 2015 properly, maybe 14, about 10 years ago.
2014, yeah.
And at the time, I was still quite early to investment, so probably 5 years in, 4 years in even, and I'd only ever bought student properties in Reading. So I make it sound like I had loads. I think I had 3 or 4, 2 or 3 flats. So they were working well. They were in my personal name. And Pete said, "Do you want to have a go in the world of HMOs?" I was always quite tentative, quite nervous about the idea of HMOs because of the regulation, because of, in my mind, they were really risky. They were for the big boys. And only now, after having, sort of 10 plus HMOs, I've realised that actually anyone can have an HMO as long as they have the right, I don't like to use cliches, but the power team behind you, right? You need to have the right agent, you need to have the right handyman, and you need to have the right guys dealing with the licensing and things like that. So yeah, it's a jump I'm glad.
Yeah. So how did you get into property investing then? What made you make that jump into property investing? Because some people I speak to, they'd rather put their money in stocks and shares. Some people nowadays want to put it all into crypto. But property investing seems to be the most secure investment for the long-term goals. So was your plans ever short-term investment goals, or were you in it for long-term?
I think the good thing with property is you can kind of achieve both. Obviously, you need to have a plan. You can't just go into it and say, "Oh, let's just see what happens." You need to say whether you're doing it for the long term, which I'd obviously recommend personally from personal experience, or are you looking to make profits in the short term? Now, the good thing on the HMO side is that it does, to an extent, offer both. You can buy a property as long as you finish it in a good order. It's respectable to the tenant. Obviously, we go for higher end HMO, so it's always respectable for the tenant. And you get a good price. You don't spend too much on. I say you don't spend too much on the refurb, but you don't go overboard, right? I tend to have a budget. Different landlords have different budgets naturally, but you can make £1,000, even £2,000 a month profit from one HMO if you're diligent and you do it properly. Back to the question of how did I get into property in the first place? University, daytime watching was Homes Under the Hammer. And I always said to myself, when I leave uni, I'm gonna be a property developer. I'm gonna be a property investor. I left uni, minus 28 grand in student debt. And I realised that dream would have to be put on hold for several years. So I went out, got a job, but I always said to myself, with the income from the job, I saved and I'm going to buy a property. So eventually I bought my first student house in Reading. I think it was 165 grand. And I spent 15 grand, I think, doing it up. So we really went budget. Now, that was reflected in the type of tenant that we got, because we got the lower end of the student market, right? And the lower end of the student market, unfortunately, don't respect the house as much as you would like. And every year, for me, it was normal to go back in at the end of the student year and spend 2 or 3 grand changing tiles, repainting, new worktop, new kitchen covers, new fridge, whatever, because everything was ruined. It wasn't until later I started to realize, actually, if you go a bit more up market with the finish and the property itself, but with the finish, you can demand a premium from premium tenants. And naturally, a premium tenant is more likely to look after your property. They respect the property more. And that's something I've learned over time. I still have nothing against targeting sort of the lower end of the rental spectrum. I think you do need to cover your options. I still have students. I still have flats worth between 200 and 500 grand. Naturally, they all command a different premium. They command a different tenant type.
It's an interesting way of getting into it. I mean, it's quite parallel to when you started sort of sourcing and really getting into property investment, Central Reading, those 2 up, 2 downs, they were plug and play, weren't they? Get one of those on, sell it to an investor, students obviously in the area as well. It was really easy to kind of leverage, but you always did have a certain caliber of tenant in there as well.
Yeah, I think Reading taught me, actually, Reading as an area taught me how to come up with the concept that we have at HMO Premier, because Reading was flooded by HMOs. It got to a point where there were so many HMOs, so many rooms. And I remember a client coming to me with a portfolio saying, what do I do? The market is absolutely flooded. I can't sell them because prices are too high and I can't achieve what I need to. And I said, well, let's do something different, which hasn't been done before. She let me refurb the properties and furnish the properties. And we provided a high-end HMO in Reading, and no one had ever seen it. But the rooms went so quickly. So what nobody has thought about, or nobody had thought about doing, and we rented the rooms quickly. So although the Reading market was flooded by HMOs, it wasn't flooded by quality rooms. So there was still a market for it. And that's what gave me the idea, funnily enough. People doing it badly, the market flooded, gave me the idea to flip it on its head. And then we realised that Reading had sort of reached its peak. Reading was probably the best place to invest in the UK for 5 or 6 years. You know that, back in sort of 2008 onwards. But it reached its peak. So we thought, well, where else can we do this? And that's when we started to look at other areas across Berkshire and Surrey. And again, it worked really well. But then, because we were doing it in other areas, it enabled us to find properties perhaps a little bit below market value, but properties that we could add value to as well. So we could instantly sit on 15 to 20% capital in a property by just being smart. And then we realised there was a huge market to use this knowledge and expertise that we have and go and sell it and help other investors who are perhaps scared of the unknown. They think HMOs, like Richard said, is beyond them at that stage. Well, it's not. You've just got to know what you're doing. So then we put processes in place where we could source the property. We had a team that could develop the property, refurbish the property. And we've gone through all of life's mistakes of working with developers and refurb companies. One went bust. We've had problems with others, but we think we've perfected it now. So we can help investors and they can learn from our mistakes. We have a legal and finance team that understand HMOs, covenants, Article 4, and we can avoid all those pitfalls. We've then got a team that will theme and design and interior design the property and make it stand out. And then we've got a partnership where we can let them out and manage them. So we created this turnkey service, which includes us applying for the license as well. So investors don't even have to worry about the license. We've never been refused a license. So all of a sudden, every possible worry for an investor, we fixed that problem. and we can do it all for them with them. And that's where HMO Premier evolved. And Richard's portfolio sort of quickly went from 3 or 4 to 8 or 9 and plus.
I mean, that's where you've completely flipped it on its head, because before, when you used to say HMO, it used to be dirty places, how many people can you get in there, not looked after, high turnover of tenants as well, and occupancy rate not really at 100%, right? But something that you're doing is, because of the standard that you're doing it to, more than likely people want to stay for longer, right?
Absolutely. We didn't go after the HMO market.
Yeah.
We went after the apartment market. 1 and 2 bedroom apartments, people that are living in 1 and 2 bedroom apartments. Why not take a better standard of house, room, fully furnished with good quality Wi-Fi, television? You can just move straight in with 3 or 4 like-minded people. And people love it.
Yeah.
They actually love it. And people that are paying £1,200 for a 1 or 2 bedroom apartment in a city centre would happily pay £950 a room in a nicer quality house,
including bills.
Including
that's
bills.
The difference. My brother's currently in Clapham. Now I know obviously you have to be careful to compare London to anywhere else, but they're paying 1,800 quid for a 2-bed apartment. Right, that sounds cheap. It's the worst apartment I've ever been in. Hopefully, he doesn't listen to this podcast. It's basically a crack den. He then has to pay bills on top. So he's living in a horrible apartment, no living room, 2 bedrooms. It's just, I try not to visit. He's so close to me. And then I go to these rooms where landlords have actually finished the property to a high standard, Pete in particular. And I walk in, we looked around one today, and it wasn't actually mine, sadly. And I wish it was. We walked around, it's an expensive house for my budget, but the finish is incredible. And I'm walking around the rooms and I'm thinking, I would happily live in this room, with this dressing room, with this ensuite, with this workspace. So HMOs have evolved. They're no longer just a grotty room. And I say that, obviously they do still exist, but with the right landlord and the right model, they're no longer a grotty room in a 3-4 story house in the city centre. You really can get a luxury HMO with a garden, with social space, with like-minded tenants, the space to work. I think, and that actually, the space to work element being, I don't like to say entrepreneur, but I work remote from all over the country, all over Europe, in fact. I love to have a nice space to work, as you do too, right? You like to be comfortable when you work. You need your space, you need your workspace, you need everything set up however it may be. These HMOs have got that in mind. We've got a few in Wokingham, but one in particular where we built co-working spaces for the tenants to sit alongside one another. There's 4 desks. They can come down, whack out their laptop. There's chairs there. It's all set up for them to work. Printer there, everything that they may need to, work from home on a Wednesday, Friday, whatever they like, or 5 days a week. It doesn't matter. So I think that's the evolution of HMOs, particularly since COVID, and I'm sure you've already touched upon it previously, but that's a huge difference now between the HMOs of 2010 versus the HMOs of 2021, 2022.
That shared space as well is very clever, because where you're talking about the disrespect that tenants had at the lower budget stuff initially when you started investing, but when you've got a bank of 4 and 4 people or 6 people sharing a printer, one person can't disrespect it because you're disrespecting the other 5 people. Right. So it brings the caliber of respect level to the property up, I think, as well.
100%. And it's not only in the shared spaces, in their bedrooms as well. They have enough space. So we have a double desk in some of the bedrooms in our super rooms. So if I want to bring someone in, or a friend can work, and they can both work from home. And it's quite cool. But going back to working with the tenants, it's how we manage the tenants. We actually manage for tenants. If there's 5 in a house, we have a WhatsApp group for that house with all 5 tenants in. So they're instantly working together, working with us as the agent, and we're talking to them on a daily basis. So they know if something goes wrong, we're there to sort it out. We can talk to them immediately. But likewise, if one of the tenants is unhappy about something, they can express themselves openly within the group, and we can nip it in the bud. So the communication between us and the tenants is really important as the communication between the tenants.
Yeah, it feels like HMO needs a rebrand. We spoke about it before.
I think it does.
I completely agree. I mean, we call it co-living, but the trouble with co-living is what I really want to do is I want to change the face of HMOs. By changing the name, I'm not changing the face of HMOs. I'm just avoiding it.
Mm.
So I want to bring HMOs up to a better standard. I want everyone else to. The house I showed Richard this morning. That house as a single would let for about £2,000 a month. As a HMO, it's £6,000 a month. I was showing Richard a couple of the rooms. We call them super rooms, up to £1,000 a month for a room.
It's mad, isn't it?
And they'll let like that.
And they will let within literally within hours. So we're trying to change the world of HMOs, and slowly but surely we are going to do it.
Yeah, eradicating those. I mean, I remember going to a HMO valuation probably 12 years ago. Might have been the first one I'd ever been to. And he said it was a 5-bed house in Bracknell, and it was an end terrace. And
is it in the Oaks?
No, it was in Bulbrook. In Bulbrook. But the landlord lived in a caravan in the garden. And one of the rooms, I'm pretty sure, was a converted utility room. It was that bad.
Was it next door to the
petrol station?
Petrol station. I saw that one.
Yeah,
by the running horse.
Yeah, but
yes,
I saw that. That's what gives it that stigma, isn't it?
Yeah,
really. You know,
absolutely.
But what you've done is there's a huge.
I tried to buy that, Ed.
Did you? Oh, I've got his details. He lives in the garden in the caravan.
Hopefully he's listening now.
He's moved out. He's moved somewhere else.
I don't think they've got Wi-Fi. Talk to us about the next steps. I mean, we're 2024.
Yep.
You know, you talk about that evolution of your relationship over the last 10 years. And if we look at the next 10 years, I know we can't predict it, although we'll try and squeeze it out of Pete like we always do. What do you think it looks like 2030 in the HMO space, or the co-living space, or the multi-tenant renting space, whatever we're going to brand it as?
So to be fair, I think we've already touched upon it. It's already begun. So the standards have improved. Now, when we first put my first HMO in Bracknell, Fencoat, it was my first investment with Pete. I was very nervous. I probably viewed it 2 or 3 times before even exchanging, because it was a big jump going from these 150, 200 grand houses and flats suddenly to spending 400 grand. So double the money it was going to cost, triple the amount to refurbish, because Pete's got a certain requirement. And he was very strict about that from the start. He said, you know, if you're not willing to do this properly, like, don't do it. Now, I didn't enjoy being told that, but in hindsight, it was probably the best thing that you could have told me. The furniture pack at the end was probably more than the last refurbishment that I'd done previously. So what I noticed, having put this one on the market, and those rooms in 2015, I think, all rooms went within 4 days. So 6 rooms, 4 days. And actually, that's not even close to the record that we've had since. We've had
hours,
6 rooms going hours.
Yeah.
And that, you know, I've had that personally, but other investors I know have had it too. So it's about the quality of the finish. Now, naturally, I went online to see if the agent, because again, Pete's got an agent behind him that manage the properties. I don't want to be managing 60 plus rooms.
No, of course.
So these guys manage the tenants. They make sure that they're the right tenant that we're looking for, but they list the properties online via their own means, via their own website, via these room letting websites. So I, being super paranoid, not mistrusting, but just wanting to ensure that it was done properly. How did the photos look? How was the description? Was the grammar right? Being super micromanager, which I now 10 years later, I don't even check. I don't even know where the ads are. But at the time,
I don't think you've seen the last 4 properties we've bought for you.
So we'll come on to that. And that is true. So it gets to a point when there's a model and you replicate this template and you build trust. Trust is it's the number one key. And I'm not saying I didn't trust Pete for the first 2 years, but he had to earn the trust for me to say to him, just go and buy it. And we were buying properties where he just would give me a number. I would email the bank or call the bank and say, look, this is the amount, because I was fortunate enough to be given headroom by the bank. You can borrow up to this much. So as long as it was below the headroom, which it always comfortably was, Pete just used to get on with it. And the last 3 or 4 properties I didn't even view. I didn't even see a picture of. I didn't even know they existed, except for the fact my solicitor said, they exist. There's a title.
You're buying a model rather than buying a property.
Buying a model.
Also, it's important that I get the numbers right. And I am pessimistic rather than I'm pessimistic, I would say, with property rather than optimistic, because I want to exceed Richard's expectation with every development or every investment that we do together. And I take it really seriously. When Richard's ready for another deal, I will go to work, and it might take 2 weeks, it might take 2 months to find a deal. It has to be the right criteria. And if it doesn't, if it's £1,000 out, if it's £500 out on the rental, I will walk away from it. So when I go to Richard with a deal and the numbers, he knows I'm going to deliver. And that's, I think, where that trust has been earned.
No, that's it. And again, there's definitely more to expand on that. But going back to the point about where is this going? So I would go on, and I saw the quality of the ads, the rooms that we had. There wasn't really any, especially in Bracknell, particularly in Bracknell, but even in Wokingham, Reading, nowhere near. You would see a few ads for good rooms, but they weren't good rooms.
Just like shared rooms from
exactly
people renting out a sublet or
That's
something.
mostly what it was, or low standard. And in some cases, there weren't even pictures of the room. And you can answer the question for yourself. How good was that room if there's not a picture on there? So at the time, quite proud, we rented out all the rooms within 4 days. What I then noticed in the next 2 or 3 or 4, as we were listing them, the quality of the competition was improving. So most people might see that as, they're copying my model. I'm under pressure. There's more good rooms out there. That means it's going to be harder to let. Actually, it was quite the opposite. What then happened was a natural expectation from tenants, professional tenants, particularly in places like Reading, Bracknell, Wokingham. You've got huge corporations here. People are getting paid well. We all know inflation has gone absolutely insane. Luckily, again, that's calmed down. But the expectation and the standard of living increased, and therefore the rental values increased, the property values increased. We've all seen what happened to property values since, and even before, but since and after COVID. The portfolios are going up, and that's going back to your very, very first comment of the day about property being a secure investment. I invest in art. I invest in wine. I've got a particularly big wine collection. I love wine. I invest in Bitcoin. I invest in stocks and shares. Obviously, that's probably the other main thing that I invest in alongside property. But property, I know where I stand, and it's always, touch wood, obviously, it's proven for hundreds of years, it goes up. It always goes up. And that is why it is the safest investment. And it's quite frankly not going down. It can go down in the next 2-3 years. I don't think it will, but it could. Maybe have a 5-year bad period, right, which we've seen in the past. But we always come out of that period, and it always spikes back up. Stocks and shares, you invest in the wrong company, that's zero. A property cannot go to zero. Land cannot go to zero. So it is the safest bet.
I think to elaborate on Richard's answer in terms of where we're going, I love the fact that other people are raising their standards because of us. And you know me well, Ian, my natural reaction to that, keep evolving. Keep raising the bar. What's next? What haven't people thought about? We're now theming each house. So it might be a cool London theme. It might be a champagne theme, a positive vibe. And we're doing great communal spaces as well. And we're just going to continue evolving. So I love that everyone else is trying to come up to our level, because that goes back to changing the name and changing the face of HMOs. That's what we want to do, right?
It's better for the awareness, isn't it, all around?
Yes, I suppose when landlords know about HMOs and what you do, then it will get their sort of mind thinking when actually this is another investment opportunity. And it comes down to them not trying to do it themselves, because that comes back to them potentially being scared to go into HMOs rather than normal buy to let. So I think with individuals, with investors especially, I can see from you two and chatting, you're a power team, right? So you're relying on Pete to give you those instructions, and Pete's relying on you to let him get on with it. And I think investors, where some investors fall short, is that they try and do it all themselves. They might link in with a local estate agent, but that local estate agent isn't really an expert in something like HMO, really. So what advice do you have for investors out there on how to make the jump, how to look into this opportunity?
I think, and Richard can hopefully give his side of this, because he's been working with me for a long time. But let's look at HMOs and break it down. I can source good properties because I know you guys really well, and I make it my business too. And I know all the local agents really well. I get approached direct by sellers. So I'm getting opportunities that you're not just going to be able to get from Rightmove. You know, we have a window of opportunity because we're known as very good buyers to get good deals. I can spot an opportunity that no one else can. You know, Ian and I were working in property together almost 2 decades ago. You know, we know the local area well. We know houses. We know where the opportunity is. And we know how to add value, and we know the right properties to buy. We're then leveraging a team of complete experts with, you know, hundreds of years experience from our interior designers, the build teams, making sure our clients only pay 5% VAT, not 20% on builds, making sure that they don't get ripped off. You know, we had a builder that went bust. You know, we've gone through those problems that investors could face, and we don't suffer fools gladly now because we've got that experience. So some investors will come and say, can I pick and mix your services? Can you source me a property and do the build, but I'll manage it myself, or I'll manage it through my preferred estate agent? And we're like, yeah, of course. Wow. You know, if we're going to enjoy working together, then that's fine. But there are so many mistakes an investor can make, which means the confident ones, easy for you to say, won't invest, and the overconfident ones will make mistakes. So it doesn't matter. They're going to all fall short, and they're not going to invest for the right, or invest successfully. So working with us will fill those gaps, stop those mistakes, and help people make more money.
Last week's episode, me and Andy were talking about open rent, and not at the HMO level, but just at being a first-time landlord, just letting a property off the bat. But the amount of legislation and compliance you need to be aware of as a landlord, and what we're talking about here with HMO is to start doing it. A lot of people are scared, you said, and they don't have the confidence to do it. But if you try and do that on your own, you'll eventually get there, but you'll make a lot of mistakes getting there. Whereas if you use the support mechanism in the open rents example of someone like Andy, you know, that's been in the game for 2 decades as your mentor or your support or your managing agent for a rental, or you use a service like yours that's been running for over a decade now, you already know the answers to the problems, so you don't make the problems. And I guess that for you has been peace of mind as the investor.
100%. And I told you at the start of today that I used to try and cut costs. I negotiated with my first letting agent from 7% to 6.5%. I tried to save 0.5%.
Yeah.
And at
bet
the
they
time,
love that.
I didn't.
It wasn't even peak. It was a company in Reading, and a private family company. They did it. They didn't care. It was 0.5%. But I realised soon that my property, which soon became 2-3 properties, weren't going as quickly, student houses, as other landlords that were probably paying 7-8%. Okay. Now that's one tip I've got. Don't necessarily follow the look after the pennies and the pounds will look after themselves adage, because if you scrimp too much, you can actually cost yourself.
Yeah.
A great example, exactly, the management side. I had a call literally on the drive here from a friend, South African friend, lives in Marlow, and he's asking me about his properties. He's got a flat in Reading, he's got a house in Brixton, and he's got a place in Marlow as well. And he's talking to me about the nightmare that he's just had with a new tenant in Reading in the flat. They manage it themselves. They use an agent to let it, but that's it. The agent's done. They've made the introduction. They've charged you 4, 5, 6, whatever, 100 quid. Then they're done. You have to do the inventory. You have to go in and deal with the tenant yourself. You're the main point of contact. These guys have got a software company in London. Every day they're working 10, 12 hours, whatever it needs to be done on their own business. They've got family. They've got 2 children each, 2 brothers. They're dealing with their kids. And then they're having to deal with tenants, and they're having to deal with driving to Reading, 40 minutes from Marlow, hour and a half from Brixton, to deal with inventories. It's just an absolute nightmare. They've saved themselves a few hundred quid, maybe every couple of months, 100, 200, whatever quid a month, not even. But for the hassle, now the new tenant moved into the flat, they thought that they could have same day turnover.
Yeah.
They'd never had a turnover before. They've never had to deal with it. They'd had a really good tenant in there for 2 or 3 years. Turns out the really good tenant wasn't as really good as they thought.
Just a quiet tenant.
Just a quiet tenant, right? No complaints. There's a reason they've made no complaints, and not to sort of, I don't want to shame them in public, but there was mold. There was broken drawers.
An investor does not manage his own properties. That's a landlord, not an investor.
Yeah.
Yes.
What do you want to be?
That's the difference.
It's a very good difference. And I think it's very evident in what we were talking about, like I say, on last week's episode, because when being a landlord is a full-time gig, and you can't have a full-time job and a full-time family and a full-time portfolio and expect them all to be singing and dancing.
And
it doesn't
that is
work
the difference now. So that's the difference between even when I started out, the landlords were professional landlords. They only bought properties, did them up, rented them out. Whether the standard was good or not is another question, but that was their full-time gig. Well, now other types of landlords are coming onto the scene, and they are the professionals, that have a full-time job, that have families, exactly as you say, that also want a pension or they want an income from property. So the tables have turned a bit, because those tenants, those landlords, are the ones that say, "Oh, I wouldn't want to live in this. I need it to be better," and that is why the standard is also improving. They're willing to spend more on the finish because they're thinking, "Oh, I wouldn't want my kids to live in that. I wouldn't want to live in that." That is the big difference between these professionals that were trying to, cut every corner, make the margin. It's not as easy as it used to be, right? But it's easy if you do it properly. If you have the right power team. I don't even go to the properties that we own. I to be honest, I don't know where half of them are. I've been there, but I wouldn't be able to find my way there now. If you told me to go and visit all of your properties, I wouldn't know. That is why you need the right people to source the right properties in the right area at the right value. You need the right build team. You need someone managing it. I don't want to manage it. I've got, at the time when I was buying the most, I would say I was during an earn out. I'd sold my business, but I was working harder than I'd ever had to work.
Yeah.
I was doing 10, 12, 14-hour days. My wife had just had our first son. So when I wasn't working, I was helping around the house. I was trying to spend time with my son. If I got a call on a Saturday saying, "Oh, there's a leak at this property," I don't want to be dealing with that. I need to receive a message to say, "Oh, there was a leak at this property.
Dealt with.
It's all dealt with. We had to pay the plumber an emergency call out of $250 plus $150 to fix it. We'll just take it off your next rent." You need to be able to trust your agent, right? You don't want to start receiving £1,000 bills for things that you haven't approved. So you need to have a good understanding, a good relationship with your agent. You need to give them permission to fix things up to a certain value. You need to give them an emergency position as well, because emergency permission. If you're on holiday or you're on a flight, you can't answer, and there's something serious, which luckily for us has only happened once or twice in 10 plus years, 60 plus rooms. We've only ever had 2 nuisance tenants that we've had to remove. That is because the quality of tenant is higher. That's because the agent is responsible for finding that quality tenant, to do the pre-vet, to make sure that you only get good quality tenants through your door. And you do that by having a good finish, and you do that by charging the premium to reflect that finish, to make sure that you do get that good tenant.
You think you're spending more money, but you're not spending money, you're making money. You know, by doing a 100 grand refurb and trying to do a 100 grand refurb for 90 grand. All you're going to do is get the builder to cut corners, make mistakes, and you're going to pay for it for the duration moving forward. Putting a really poor quality furniture kit in a house, everyone loves IKEA, drives me mad. That furniture is going to fall to pieces within a year. If an investor says we're going to furnish a property from IKEA, I won't work with them. It's as simple as that. You invest a bit more money into it, a bit more time into it, and you'll get that return. You'll get an £800 room for 10 years rather than a £600 room. You work out the numbers.
I used to think about that as business shoes. So when you had shoes and you used to spend £150 on a pair of shoes, real leather shoes, and they used to last 3, 4, 5 years. And or if you go to River Island to buy a £30 pair of shoes, they'll fall apart within 5 months.
And it's the hassle because you have to change them every
year.
You look at it, River Island, I think, are 2 months, June, 6 months, and then you've got Russell and Bromley for years.
Exactly.
It's a great point. And I think the other thing for the type of landlords and investors that are getting into property, a lot of them are business owners that are looking to leverage company funds and create pensions, etc., and this long-term plan. But if you're scrimping and scraping on, like with the chap you mentioned there in Marlow, £150 a month on management, how much do you value your time? Because he's had a 20-minute call with you, a 40-minute drive, an hour there, 40-minute drive back, probably another hour at the shop. Before you know it, he's doing £15 an hour jobs as a landlord, which could just be time with his son.
And it's time and it's stress.
Yeah.
You know, people want the easier life now, and that is the difference as well between the modern people. Should we call them?
Yeah.
We enjoy. In fact, time is more valuable now.
I think anyone looking at agents out there, if you're looking at someone to manage your HMO portfolio and they're trying to get your business around 7 or 8%, don't use them. Yeah, 7 or 8%, trust me, it will not pay them enough to look after that HMO well. So you think you're saving money, but you won't, because the tenants won't be looked after properly. The tenants won't be matched properly. They won't probably be checked. And the property will deteriorate quickly. Investing a little bit more money in the management side, so the tenants are going to be looked after, so they're going to look after your property. Tenants are going to be better quality. It's an absolute no-brainer.
I think it's a rule in business in general. Everyone, both parties, all parties need to win. Everyone needs to feel like they've won. If there's someone that's feeling particularly, done over, they're not making enough from doing something, they will not provide you with the level of service that you want. You may be there and I've knocked out this local family estate agents down to 6.5%. You'll be pleased to hear that I no longer pay them 6.5% because I realised that they didn't care enough. I paid going rate. In fact, I think I even give them a bonus when they do rent out the properties. If you reward people, they will work harder for you, and you will get the rewards in the long term. You will rent out your properties. You'll get higher rate. You will not have to worry that property is being looked after, exactly as Pete says.
I think I must say, Richard's been probably one of my favourite clients to work with. No, you have. But it's a real relationship. We do disagree. I remember.
No, we don't.
Yes, we do. I remember going to Richard with a property, Wylam, and I put the numbers to him, and Richard was like, "That's a jump up. We're going to spend that much money on a 6-bed HMO." And I said, "Trust me, it's below market value. It's about 15% below market value, and we will get probably on average £800 a room." And Richard was in a rush. He's a very, very, very busy man. That's why he loves working with us, because we can take all the pressure away from him. But the one bit of time I do need is at the beginning, where I say, "I found this property. These are the numbers. I need you to look at them and trust me." And we didn't have a disagree, but I had to push you on that one, didn't I?
You did. And also with the finish of that one in particular, Pete wanted to do certain things, new boiler, silly things like that cost a few grand, right? And I was again, we've already spent this much on the property. Best thing we could have done. We've got other properties now where I didn't change the boiler, pre-Pete and post-Pete. And I'm having to change the boiler, having to maintain them before I do. So in one case, 1 year last year, actually, we spent £600 fixing, repairing, call-out charges on one particular property where I didn't change the boiler. Now we've had to just change the boiler. That's £600 wasted, because we should have just changed the boiler in the first place instead of trying to avoid. It was 15, 20 years old, this boiler. It needed changing. And I think going back to Wylam, that was nervous for me because it was an increase of 50% of what I've always 50% of what I've always invested. So a huge jump financially, and the property wasn't in the best of condition, but the capital return was attractive. Pete sort of presented the numbers, said that when it's finished, it should be worth this value. And actually, when we had the valuation at the end, I think partly because we did get lucky because of COVID.
We didn't get lucky. We bought well.
Well, the COVID outdoor space, people wanted bigger houses all of a sudden. People valued houses. That's the difference now in today's people, once again. But they want a better house. So the percentage of your salary that goes towards your mortgage or your rent or whatever it may be is higher, not just because rent and houses have gone up, they have, but also because people value their time at home more than they ever did before. So sorry, Pete, to talk over you, but the Wylam in particular was a nerve-wracking investment for me, but it is now my favourite because I had it valued after. Now I'm quite a risk-averse investor. I put 40% down. A lot like to put only 10 or 20, but I put 40% down, and then I pay for the refurb myself. The bank love me because by the end of the refurb, they have an asset that they've got security on that they, technically they put 60% down, but they haven't put 60% down because I've put so much into the investment. I now own over 50% of the equity, 50% of the equity. So we had a revaluation only because Pete was pushing for it. He really thought that it had gone up in value. He promised me that it was worth a certain amount, and I was like, "There's no way it's worth that amount." And the valuer came out and valued it, and it was 75 grand above what Pete had said it was already worth. So once again, I think COVID helped.
So Pete was right.
But
Well,
obviously, the moral of this story is when it comes to property, I'm always right. But look, Richard is a very clever, very successful man. I'm not blowing smoke up his arse, but he trusted me. I went to him with a concept and said, look, post-COVID, I think there's going to be an opportunity to go after 1 and 2 bedroom apartment markets with bigger rooms, bigger communal spaces, but we're going to have to spend more money. And he trusted me and he went with it, and he's been rewarded for that now. But I think that house in particular, we bought, it was on for 475. We paid around 425.
428.
428. And it's valued over 600 grand. I won't tell this. I think 625.
Yeah,
Happy days.
Slightly higher.
That's what you want. I mean, how do you assess a good investment like that, though? How does that jump out at you?
Well, I think, if I'm being honest, having got into property in 1997, I've probably viewed tens of thousands of properties. So a lot of it comes naturally, but we're relentless. Every day we're looking at Rightmove every single day. We know we're speaking to agents every single day to speak about those special deals that don't go to Rightmove. And we get out and we view, in a good market, up to 40 houses a week, the team. And in a bad market, still 20. To keep relationships going with estate agents, to make sure we know where the market is, what's changing, what's not. And I can just look at a floor plan and my mind, I've got a very creative mind, and I can just look at what's possible with it. And then I go to the investor with my brain, my concept, my ideas, say, this is what we can do to it. I'm looking to add value to the house. And my agency background will help from a residential dwelling point of view. But I'm also looking to add value, as much rental value as I can, from a HMO point of view. So when a valuer comes out and values it, we can maximize the return on bricks and mortar, but also from a HMO point of view as well. We don't overdevelop it. If you overdevelop it, you turn a downstairs living room into an ensuite bedroom, that actually downvalues the house. So you don't want to be too smart. So you've got to know where to add value, where not to. And I'm very good at that. That's probably my USP.
And if you're not watching on YouTube, but you're listening, Pete's quite passionate about that. He means what he just said.
I think I'm quite passionate about everything, unfortunately.
I mean, it's a perfect way to kind of sum it up, because the way I think I like to look at trends and human behaviours, and we touched on COVID there, but the world has shifted. Less people are going to office space to work 9 till 5. They are spending more time at home. It was exceptionally clever to look at it and go, the 1-bed, 2-bed market is about to change, and this is a better option for them. A 6-bed HMO with a co-working environment for 4 to 5 people is just a no-brainer in this day and age, and a garden on top of that as well, because people are now working from home rather than working from the office. So their home is their work and their home, which, is why these things are fetching that premium. And I think the standards for HMO, I'm going to get to work on the rebrand for the HMO.
Yeah.
That's my thing.
Your goal.
I'll come up with something. Me and Chat will have a little chat later on, and we'll come up with something that's between Macca and AI. But it's been really, really insightful to hear, like, both of you in there. It's not yin and yang, because it's not kind of black and white. It's actually, you're very much in sync with what you're trying to achieve here, which is very interesting. And it's great to hear your story, Richard, as well. And Pete, always good to have you on the podcast. But it'd be interesting to see over the next 6 years actually what happens in the HMO space, because we are seeing now that the standard buy-to-let is definitely doable. But what it does is it gives a long-term plan, whereas HMOs do something different to wine and to crypto and to stocks and shares and to normal buy-to-lets, and that's they bring you profit monthly and an end equity output, which you don't get from the others. It's 2 revenue streams coming in.
Agreed. If anyone's out there and they have got an underperforming buy-to-let portfolio, which I know a lot of people have, if you have a 4-bedroom house, 5-bedroom house, even a 3-bedroom house with 2 reception rooms, then come and speak to us, because you can comfortably turn that into a HMO. So a lot of people are coming to us and they're looking to change their buy-to-let portfolio and transform it into a HMO portfolio, and you can turn maybe £300 or £400 profit a month into thousands. So just something for people to think about.
It's not bad. Sounds all right.
Sounds too easy to be true.
Yeah.
Pretty much, can be.
Thanks for coming on, gents. Really
Pleasure.
appreciate it.
Always a
Thank
pleasure.
you.
Having us, yeah.